Mr. Anil Sarin will be talking to us on the market fundamentals from Edelweiss. Jai Bala is joining us on the phone line all the way from Singapore on technicals. Jai, first let me talk to you. You had kind of indicating that this the rally on the benchmarks may get a bit exhausted. The triggers are coming from the geopolitical side. Do you think this has more room on the downside?
Yeah, good afternoon, Ajay. The important level for the Nifty right now is about 12,000, which is very close. And it's just a psychological level, although 12,100 was the price level that the market has already broken. And, the market is finding it easy to drop down. The market has been ranging for about 200 points for the last 2 months, and that was never a sign of strength. And this is exactly what I've been warning about, and people should not get to the middle of the rally. So I think this geopolitical event has actually provided the trigger for the possibility of a multi-week correction for the markets. And if that's the case, the market should break 11,800 shortly. I'm not yet preempting the market, but if 12,000 goes, I think 11,800 and further below levels are anticipated. So watch out. 12,000 is a psychological level for the market, not a technical level. But if that does go, that action point is going to be 11,800.
All right, Jay, we'll let you go on that one. Thanks so much for that quick take on technicals of the crack of the markets. Mr. Sarin, very good afternoon. How are you analyzing the geopolitical jitters which are gripping the globe right now? And we are not alone. We are also participating in this downside move which is happening in the market. We are also armed by a multi-month up move which our markets saw. How are you analyzing? Do you think it can catapult into something bigger, or do you also see some signs of around the US elections, things like these, some strengthening of stance from US towards its enemy states is a usual thing? How are you analyzing this, the way global geopolitical issues have turned up now?
So clearly, I mean, the global markets, including the Indian market, had been doing quite well. And as is usual for markets, once they extend themselves, they need an excuse. And that excuse for coming down has been provided by these geopolitical events. But I tend to agree with you that part of this is to be expected in the fourth year of the American presidency. Positive factors in the form of a deal with China, a deal with India, etc., could come, which would provide some support to the market. Out here, speaking strictly from a fundamental standpoint, Russia's stance becomes very important. On its own, Iran is unlikely to cause any major upheavals. If it does, it will do it with the support of other strong powers which are not aligned with the US. So one remains in a wait and watch kind of a mode. From a fundamental standpoint, as you had mentioned just a moment ago, the green shoots are visible, and those, to my mind, would accelerate as time goes by, and they will provide underpinnings for the market to remain stable without falling too much.
I'd like to talk to you a little more about those green shoots which the PMI data is also indicating, and a couple of consumer-centric companies like Bajaj Finance, Godrej, Titan have also given out their provisional Q3 numbers, which don't look that bad. But before that, we also spoke to Alistair Newton. He's a former, he used to work for the British government and has been an India watcher for almost 30 years. Now, then he worked for Nomura. So he looks at market and geopolitical linkages very closely. Here's what he had to say about the way things are developing right now in the Middle East.
We are in for a phase of probably very sustained volatility, maybe even through all the way to 3 November, and from Donald Trump's perspective, the all-important US election. Now, having said that, I do think we need to keep oil markets, at least, firmly in proportion. If we think about what we have seen since Friday morning, when the news of General Soleimani's assassination first broke, it's actually been what I would describe as a measured reaction by the investment community. We saw a hike of roughly 3.5% in the price of Brent crude on Friday, compounded today by, as you rightly report, the rhetoric which has been going on over the weekend, in particular Iran's statement that it will no longer feel bound by its commitments under the 2015 nuclear agreement. Now,
Anil, how do you see purely the risk of crude spike and its impact on India's macros? Because we are already stretched on the macro front, barely able to meet out its expenditure from the government side. And then now comes this bolt from the blue, from the Middle East, and strengthening, kind of the situation is getting tense, commentary from both sides pouring in. Is the oil market adequately supplied? The commentary from Dharmendra Pradhan seemed to be suggesting that we are prepared for any kind of eventuality. HPCL also said something like that when we spoke to them. How's that risk, the oil risk for us?
Yeah, so I'm in broad agreement. I mean, these problems of India getting supplied crude from Iran has been under a cloud for the past many months. America had made it clear that India is not welcome to import crude from Iran, and due to these ongoing problems, India has been making alternative arrangements. So that is the volume argument. Volume perhaps is not a problem. What is a problem, however, is the price. And as the price has sort of spiked, even today it is around 2.5%, 2.6% up on MCX. So that needs to be watched, especially as the budget gets formed. It can cause a little bit of an upset in the calculations. But by and large, I think in terms of the volume that needs to be supplied, India has been preparing for alternatives. And so those things are in place.
Yeah, we did. On Friday, we did. And actually, it is continuing like that. We are aligning it to the international prices on day-to-day basis. And that has been going on for some time. So I do not think there is any change to that policy. As far as India is concerned, the increase in the crude prices as well as the exchange rates will matter.
Was that what has been the price hike at the retail level between Friday and today?
I think it was around 10 paise or so.
And this is exactly in line with what's happened to international crude prices, right?
No, the international crude prices jumped in last 3 days, but the domestic product prices are aligned to the product prices in the international market, not directly to crude prices. And it is based on a 15 days rolling period. So,
Anil, now let's talk about the PMI data, which is at a multi-month high. Commentary from Titan, GCPL, even Sobha numbers were not that bad. But again, this argument of green shoots and then failing of that argument we've seen so many times in the last few months. What's your own individual assessment of things as they look now?
So we've been looking at the EPS growth of the Nifty mid-cap and also the EPS growth of the Nifty 50. So what we have seen is that for the last 3 quarters, the Nifty 50 EPS growth has been flat to negative. However, if we now look at the Nifty mid-cap, which is more broadly representative of the Indian economy, for the past 3 quarters, they've been showing strong EPS growth. So it is not just the current, green shoots, but it has been building up. Now, you might say it has been building up on the low base of the corresponding previous quarters a year ago. That is true. But what I'm saying is that the earnings revival that one is seeing is more broad-based in the Nifty mid-cap. And these kind of false starts that one is talking about, that, yeah, we have seen green shoots and then they peter out and then there is an atmosphere of gloom once again. It is par for the course. As the economy bottoms, there will be a few false starts. Now, speaking of Sobha has shown good numbers in volume terms. Not only that, DLF, Kolte Patil, few other companies in real estate domain have been able to, record very strong sales in different geographies, in the NCR region, in the MMR region, and in the Bangalore region. So this is indicative of bottoming out of the real estate residential demand. The real estate commercial demand has been strong and it continues to remain strong. Now, the other point one would like to highlight is the GST, which, from time to time the government has been reducing the GST rate, so comparison becomes difficult. But all the more, all the same, December, the GST data has been strongly positive, which sort of goes against the general narrative of a very gloomy kind of an economic situation. And I'm not here to say that all is well with the Indian economy. All I'm saying is that these green shoots will become more numerous as we go forward in the next few months.
Right. Anil, also, a question which may not have a direct bearing on the market, but it is serious as a citizen. Also, from the market standpoint, how foreign investors look at India as a location for investing. Recently, there have been a spate of issues in various protests in various states, and now then what has happened, the violence which erupted in JNU. You have interacted with a lot of foreign investors also previously in the cycles and your rich experience. For an outsider investor, is it area of a worry? Do they also take into account all these things? And what's your take on that? It is clearly disturbing, but it does have an indirect bearing on the market as well, or the investing environment.
Yeah, so it is not good news. Our image in the international arena has been taking a little bit of a knock. That cannot be denied. But not to sound cynical, but financial investors are more motivated by the more economic factors than social factors. Clearly, what has been happening on the social side is something that ideally should not happen. But if one takes a broader view of things, financial investors are more focused on economic things like currency, like what is the earnings expectation, how is the economy performing. So yes, negative as it is, but it currently does not have the potential to derail the momentum that the FIIs have towards Indian stock markets.